Welcome everyone to the first CoinDesk webinar of 2022. Now, a lot of bad news on the news today. So if you're on Twitter or any financial news network, you're going to hear all about catastrophes and difficult times ahead and confusing things about the economy and inflation. But here, you're going to hear about the start of the golden age. So we're not talking about all the trouble ahead for normie finance. We're here to talk about truly the golden age that cryptocurrencies and DeFi could usher in. We've got two great guests with us, and we're going to be going over the year ahead, exactly how it's going to solve some of the problems that some people believe are leading to these catastrophic future scenarios. And we're going to describe a little bit more about what this golden age looks like and how it's powered by this technology. So I'd like to invite our two guests now. First, we have Joao from Circle, a long-time operator at that really important and vital business in the industry. Welcome, Joao.
Thank you. Thanks for having me, Noel.
We also have Nadav Hollander, who joins us from Dharma, one of the really fun and powerful wallets that's helped power a lot of the growth in DeFi up to now. So I'll let both of these guests introduce themselves, but we have both online now. Joao, welcome. Nadav, welcome. Joao, I would like you to introduce yourself quickly and just set the stage, because I've done a little bit of introing of your background with Circle.
Sure. Thanks, Noel. Hi everyone. Can you guys hear me?
Audio. Joao, you're okay.
Yes. Okay. Thanks for having me. So I've been with Circle for a little over 6 years at this point. I had one of our product units, particularly focused on the stablecoin solutions that we bring to market, starting with USDC. We have seen tremendous growth and interest and adoption in 2021 throughout DeFi and some other use cases, and excited to talk about all that today.
Right. Nadav, pardon me, I had a bit of an audio issue. Nadav, welcome.
Thank you. Yeah, I can give a little bit about myself. My name is Nadav. I am the CEO and co-founder of Dharma. Dharma is a cryptocurrency wallet whose sort of calling card and specialty is making it very, very easy to go from dollars in your bank account into anything in DeFi that you are interested in using. So effectively, what we try to do is take what is normally a very complex process for the average consumer, in which they have to go and purchase cryptocurrency on a centralized exchange, set up a non-custodial wallet, wait for that cryptocurrency to become withdrawable, withdraw it, and then go through the whole rigmarole of actually submitting a transaction on a blockchain in order to earn interest, trade a token, etc. We kind of collapse all of that into a point and click kind of just download an app, connect your bank account, invest in DeFi experience.
Great. So, it might seem like small innovations here, but these two innovations combined could really lead us to this golden age. And part of being in a golden age, of course, is solving the incredible problem of today that you hear about regularly, financial inclusion. There are a few obstacles to financial inclusion, and we're going to go over those obstacles today and try and line up how stablecoins and DeFi can address the problem of financial inclusion and really, I hope anyway, allow you to imagine, those in the audience, what the golden age can look like, and hopefully you'll see it for yourself if you haven't already seen it. So first up, my board here is not too clear for the viewer. I'll be able to fix some of the scale of that going forward. But the first part, within barriers to inclusion, we've got three major issues as I see them. And beginning with social and demographic. So social and demographic could mean distrust of banks or institutions, right? So we see a lot of distrust currently. We see it with the COVID pandemic. All sorts of faith and trust in various government institutions have been severely strained from it. Everyone in the whole Occupy Wall Street movement remembers that same feeling for the entire industry of finance. And a lot of what happened in crypto was born in that era, born in the era of distrust for financial institutions. And a lot of people found their way towards this industry for those reasons. And a lot of companies were set up in order to solve the problem of financial inclusion. And we just happen to have two of the most important vehicles for that today. So I want to start with a bit of the long-term vision of each of your companies, and how it fit into that aspect of institutional trust or lack of in finance. So Joao, Circle's been around for an awful long time in this industry, certainly has a long enough memory to remember Occupy Wall Street and all the stuff that was going on then, and the lack of institutional trust. If you could describe a bit about Circle's overall vision to overcome these problems and where it sees itself in the future, if it can solve these problems.
Yeah, that's a key part of it, I think, of what we're all trying to achieve as part of this industry. What Circle is trying to achieve is to build this idea of a crypto commercial bank eventually, right? That runs on top of crypto infrastructure, in particular stablecoin infrastructure, which is kind of our focus. But there are reasons for that, right? And the reasons, they touch exactly what you said. We just think, with the technology that we have available today, there should be better banking services for businesses and for individuals, not only banking, but financial services in general, that have certain quality attributes that should be significantly better than what people have access to today, right? For example, things like the cost of banking and financial services, and I'll touch a little bit more on the details of that, but it's still pretty high for a lot of the population in the world. There's actually a level of some of those services not even being available for a huge portion of the population, right? It's actually not easy at all to get access to a bank account. Then you enter the side of the way that actually banking works, and I'll touch on that a little bit more as well. But also then the lack of interoperability, right? I'm originally from Brazil. I lived 12 years in Europe. Now I live in the US. And it's tremendously hard to as you go through that kind of more global life to deal with your finances. And I think we all share in this industry a belief that crypto in general is just a significantly better infrastructure for all these kind of services to be built on top of, right? So first of all, it addresses the interoperability. All of these technologies are built in a way that they're all open, interoperable, permissionless, right? People don't need to ask for permission from anyone to play with these rails, and innovation is outpacing anything because of that. Also, it gives access to these services to hopefully a much broader set of the population, because all you need is a mobile phone and an internet connection, right? And off you go. You can already start taking care of your own services. And also, I think then touching on the stablecoin, and as I said, the way banking works and the cost of banking, and this is a piece of education that I think we still need to work on a lot more, is that the way that banking works with, you're putting your money on a bank as a deposit, and the way that the bank can, in a fractional way, turn that into lending, right? And that's primarily the engine for how a bank works. It's great for the banks, but quite honestly, it's not very good for consumers, because you're getting, a fraction of what you can get from a return point of view, while the bank is owning the majority of the value that's being created. We think also crypto is generating a slew of companies and services that actually deliver more value to the consumers, right? And I think that's attracted a lot of consumers to the kind of returns that they can get from stablecoin deposits and things like that. So that's a little bit of the vision that we have for that space.
And I'm glad you mentioned the signing up piece, right? And how to get started and begin an account. And all you need is electricity, internet, and a mobile phone. Of course, you need one more piece, and that's a wallet. And Nadav here, how does Dharma see its role long-term in the industry to solve financial inclusion with this unique little tool, with this, private public key generating key signing device that you guys have helped innovate? How does that fit in, and how do you guys see that contributing to what we hope is a golden age?
Right. So, I mean, first of all, I would just echo everything that Joao said about, the broader promise of DeFi and the broader promise of crypto. I could wax poetic about that for a long time, but in short, I think that this new financial system that's being built on cryptographic primitives is just going to be fundamentally vastly more accessible on a global scale, vastly more transparent, and it's going to be entirely permissionless to build upon, which is just going to create so much more competition and kind of create such a better experience for the end user in a way that the current sort of banking infrastructure, in particular in the United States, has very little of, essentially. So in short, DeFi is very exciting, but it's very, very difficult to use today for the average person. Web3 is very exciting. NFTs are very exciting. Everything that's happening kind of with decentralized applications, it's crossed a chasm where it has very clear product market fit now. It's not an academic thing anymore. But for the many people who are listening, I'm sure a subset of you have never actually tried using a decentralized app, and if you would, you'd know that it's an incredibly cumbersome experience right now. It's so far from the place where a average person you pull off the street would feel comfortable using it, let alone even know where to get started. And so really, I think that and when you look at what makes it hard right now, and we spent a lot of time thinking about that at Dharma, we kind of came to the conclusion that it's sort of the critical drop-off point lies at the intersection of setting up your wallet and getting it funded, essentially. If you are already literate with how to use non-custodial wallets, which are effectively like your browser to this new decentralized financial web, and you already have cryptocurrency in that wallet, the experience is certainly has some kinks to be ironed out in it, and it needs to scale more and become cheaper, but it's not that bad. But if you're starting cold and you've never even heard of a non-custodial wallet before, and you don't have cryptocurrency already, or you don't have the amount of cryptocurrency that you need in order to do the transaction that you want, essentially you're sort of doomed to this 5 to 7 day onboarding period, where first you need to go and buy cryptocurrency. And if you want to go and buy cryptocurrency at any sort of significant amount that's above, call it $1,000 or $5,000 or so, you're going to be waiting at least a week until you're really actually able to custody that yourself. And then you have to go through a very laborious process of actually setting up a non-custodial wallet and then figuring out how to transfer your funds from a centralized exchange to it, and so on and so forth. And so it's kind of like the equivalent of like, if in order to onboard onto like the web, you had to, back in like, call it like the late 90s, early 2000s or something, you had to go and like snail mail a request over to like the modem shipper or something like that, or the ISP, before you could actually get set up. And so essentially what we view ourselves as doing is just, we want to be a force multiplier to the adoption of DeFi and cryptocurrencies. And we want to essentially create an experience that's familiar to people in terms of kind of mapping to their mental models of how normal web applications and mobile apps work, but essentially gives them the sort of portal to everything that's happening in this decentralized web.
Yeah, the reason I brought up Occupy Wall Street in the first place is because doing some whiteboarding with the CoinDesk folks over the past couple of days, we named a DeFi session event, our big event Consensus, Occupying Wall Street, like literally already doing it and in the space. And when you described, making onboarding easy and taking away, with your analogy, taking away all the complexities of the old system meshing with the new, and redundant obstacles that creates, when I see DeFi occupying Wall Street in this way and starting to mimic and take over certain levers, it contrasts most importantly with information sharing. You're here on this webinar, Joao is here on this webinar. Within the world of Twitter and all of the analysts in the crypto space, Jeremy Allaire, who has spent years on the on the circuit trying to promote literacy education about what's going on, that piece, the Occupy Wall Street, that really bemoaned the information asymmetry, right? We don't understand what's going on Wall Street. And when you describe now that the new DeFi projects and tools are complicated to use, but you're building ways to make those easier, and also providing information and guidance, where do you see that for your role, Joao? Promoting it's not so much financial literacy as it is the ease of use of some of these tools and promotion of the benefits of them. So the communications arm, the messaging arm. What do you guys do out there to help promote financial literacy and help promote the comfort needed in order to access, or the confidence, I should say, more or less, to access these tools?
Yeah, so Circle, as you mentioned, and Jeremy has been at the forefront of that, but Circle has always tried and continues to try to be very engaged in that, right? Both at a regulatory and governmental level across the world, but primarily in the last number of months in the US, because the conversation, quite frankly, has heated up in the US, and we think that's for the good. It's a great thing that these topics are being debated, within the realms of our democracy. It was about time, and it's actually gratifying to see crypto as an industry reaching that point. But you also can see clearly that there's a long road ahead of us in terms of education, right? Because unfortunately for crypto and what happened in the first decade of the industry, right, there was always a lot of bad news and bad things being told about the technology. We continue to have, Nadav has pointed to some of it, but we continue to have some, quite frankly, user experience issues that are problematic from a consumer protection point of view, right? People losing access to their funds, hacks, like all of these things that continue to happen. And I think we all hope that, and this is part of the role that we at Circle, particularly with the build out of US dollar coin as a piece of this infrastructure, that we not only through education, but actually through software and infrastructure, we try to solve for, as well as try to make this entire experience easier for builders who are building these services on top of, because USDC needs to live on multiple blockchain ecosystems. It needs to be movable and interoperable across all these services. So there's a piece of education that, even though we don't serve consumers directly, we serve businesses who then distribute something like USDC to these consumers. We think a lot, and we invest heavily on that portion to make sure that the infrastructure allows for better user experiences to be built. And then going back to the initial point, and then on the education and on the literacy piece, we have invested a lot of our time as a company, again, talking to primarily regulators and governmental agencies to make sure that people can separate the noise from the signal, right? And I think I'm super optimistic about what happened in 2021. I think there's a great number of people that now understand that, yes, there are risks, and we should make sure that as an industry we manage those risks. As I said, a lot of things to be figured out from the perspective of how identity is dealt with in blockchain use cases and consumer protection. But a lot of people are seeing the potential for this technology at that level as well, and not from the perspective of like attacking the banking sector or anything like that, but as a technology that should be used to improve the entire financial service.
And so, Nadav, you've got a separate barrier, let's say, and that is that non-custodial part, right? There's a certain responsibility on the part of your customer in this case, and that, I think, obstacles for everyone, right? It's more than financial literacy. There's a financial responsibility piece that comes with it. How do you go about framing that for folks? Is it about contrast? Is it about saying, what the traditional finance system does wrong? Or is it really just about the positives and the aspects that self-custodial tools bring?
So we've actually taken a very orthogonal approach. We really have not, we haven't tried to tackle like solving the problem from like a communication standpoint. We've tried to tackle it from solving it in like a product standpoint, right? And just making it so that users who, even the smartest of users, are prone to shooting themselves in the foot in scenarios of self-custody. They have sort of safety nets, effectively. And so what we've done is Dharma is what is called a smart contract wallet. And forgive my pedantry here if I'm saying something that people are already aware of, but I'll sort of explain what that means. Essentially, at least in the world of Ethereum, you can have either a EOA wallet or an externally owned account, in which essentially the user has some sort of seed phrase, and if they lose that seed phrase, their SOA or SOL rather. A smart contract wallet is one in which actually the user's wallet is a smart contract that they have a seed phrase that lets them control that smart contract. What that lets you do is that you can kind of create arbitrary logic for resetting the user's account, essentially, if they lose their seed phrase. And so the way this manifests in the Dharma app is that if you were to, smash your phone, or you're going to get a new device, or you lose your seed phrase, whatever, there's essentially like a process you can go through in the app to recover your funds, essentially, in which the Dharma app will essentially help you reset your wallet to a new seed phrase. Now, critically, that the drawback there is that you don't have the same perfect degree of self-custody that one would have with a pure seed phrase or with a hardware wallet or what have you. But we think that that's a trade-off that a lot of consumers are willing to make. Using non-custodial wallets is not only about the non-custody aspect of it. A lot of it is about having a persistent digital identity that you're able to use to log into various different applications and use different financial services. And so I suppose what I'm trying to say is that there are a lot of shades between what is like a Web2 centralized exchange and a fully non-custodial wallet. And what we're trying to do is to create an experience that sort of accommodates all parties and gives you the benefits of a non-custodial wallet from the perspective of access and what you can do with it without sort of putting beginners in a position where they could lose their life savings if they put their money in this.
And so what you're basically cribbing off of is people's familiarity and experience with the internet as it is, and all of the different pieces they can use to manage their identity online, and poured over some of those engineering workarounds in order to power a system that can give folks a much more intuitive connection to these assets.
Yes, I mean, think about it from a consumer standpoint. Like, the average person has never interacted with a technology product that doesn't have a way for them to recover their access if something goes wrong. There's literally not a single example, right? And from a consumer standpoint, right? If you get more into like the business world, then sometimes you interact with those sorts of systems, but that's just like a very, very foreign concept, and it's a very intimidating prospect, honestly. I've been in this space for a very long time. I'm sure Joao would agree as well. I get super, super nervous about where I store my hardware wallets, what's, how their like seed phrases are backed up, like what happens if my house burns down in a fire. Like even experts in this space don't have the best solutions. And so I think it's very, very important to sort of create an insurance policy for the average user if they want to interact with these technologies.
And would you say that one of the big benefits of that insurance policy is all of the composability, let's say, that comes with infrastructure that allows for this kind of locking value, collateralizing different, coins, and the types of products you can build on top of that infrastructure is vastly different, right? So when you look at the whole universe of collateralization and staking, and from an infrastructure point of view, when you offer this customer support, when you offer this ability to help them along their way, what kind of products do you see that would be a good fit for that infrastructure and to onboard more folks?
Do you mean in the context of a wallet, or like outside of the wallet? Just
well, along the lines of total value locks, right? Right now, we see that there are all kinds of contracts that can be deployed when coins are locked up, right? Your wallet being a major on-ramp to that, to accessing that whole world, and that's a major, let's say, limit, right? infrastructure is not necessarily intuitive, right now, but that of course can increase participation, especially if there are more products.
Yeah, I mean, if I'm understanding your question correctly, it's like, what are the other sort of like trust enabling products that need to be built in the ecosystem in order to get more normal people to put their money in?
Mhm.
I mean, this is a little bit of a trope, but I do think it has truth. Like we need better insurance mechanisms, like literally insurance mechanisms, not like I spoke about insurance and sort of the analogous sense of like, you need an insurance policy on what's in your wallet in case you lose your funds. But like, but it's still a very underdeveloped niche of the DeFi space to have like true insurance on deposits that you have. And users will sometimes see these advertised rates of like 7%, 8%, what have you. And they'll say like, okay, well, is this FDIC insured? Of course it's not, right? Not at the level of the protocol, at least. Often the underlying stable coins are, but there needs to be some sort of true insurance primitive that exists in the space in order to instill more user confidence. Because if the use case, as it often is savings, nobody, it's the risk reward is sort of definitionally not in the right place for people to put like, life savings into DeFi if they don't have some form of insurance.
Risk adjustment would just not even allow it as far as the analysts go in that sense.
Right.
So Joao, Nadav brings up a good point that insurance as products, and we have some of the largest insurers in the world that are doing more than dipping their toes. What do you see on that landscape? Do you see, some of these big London-based reinsurers interested in participating? Where with the bird's eye view that Circle has throughout many of these large international companies, where do you see insurance as a priority, and can you imagine these things coming together?
Yeah, I think the main thing that we have seen, at least in 2021, and we were actually very, very active in this space with a product that we recently launched called Circle Yield, is not necessarily what you said. So not necessarily the insurance industry looking at what's happening in crypto and trying to play a role in that. I actually have not seen much of that. Perhaps these days it feels like every major financial service or institution does have some sort of a crypto team and is looking at that technology, but it hasn't been something that from a frequency point of view I've heard much. But I think the crypto industry itself is, as Nadav said, is definitely trying to address that. And so, because I think primarily what we have seen in 2021 is an interest from a more traditional institutional point of view, people attempting to allocate their capital into the kinds of returns that you can get from DeFi protocols and apps. And obviously, you mentioned, in the traditional hat of an analyst, a lot of those products still have tremendous challenges for traditional institutions to put their capital on. But Circle, for example, with the Circle Yield product, is trying to innovate in that space. Is trying to kind of adapt the kinds of yield rates that you can get from essentially lending crypto or stablecoin more specifically into the crypto industry for the investment purposes that people who need capital might have, with some added flavor of an insurance policy bound to that product. So kind of combining different pieces from what you can put together, maybe in our case by providing extra collateral in the form of Bitcoin to kind of securitize a little bit of the capital and provide an additional level of security for those institutional clients. And then there are companies trying to do this in a different way. And obviously then the rates get naturally adjusted, right, as you need to allocate capital in a different way and use these sorts of collaterals. But what we have seen is that those approaches are allowing to get more traditional institutions allocating more and more capital in the space. And I think this is a trend that we see continuing in 2022.
Is that easier for the C DeFi space? So for, a typical crypto exchange being able to stake coins, which is really just, have a kind of, not a deposit, but keep custody of themselves, but then also offer different insurance products on top of that so that those funds are more secure.
Yeah, exactly. The term that we talk about, and I think the industry is beginning to use as well, is this approach of CeFi to DeFi, right? Because DeFi for institutions, it's still something that in most cases it's being kept at arm's length. People are still trying to figure out the risks involved with, going to a capital market where you don't actually know who your counterparty is, right? And for a lot of institutions, that's usually not even a starter. But there's a lot of people trying to figure that out, whether in the form of, permission DeFi pools. For some people that violates, some DeFi principles. And then this approach of using a centralized party, right? Some sort of institution like Circle and others as a company that can wrap access to the DeFi industry in the form of a regulated and slightly different and more palatable financial product is definitely, I think, something that we're trying to do, and I think something that other people are trying to do. So definitely this CeFi to DeFi approach is gaining traction.
And the CeFi to DeFi approach, from a CeFi point of view, there are certain customer bases, let's say, that are already even underserved, right? Really big companies in America don't seem to have any trouble, but those small and medium-sized businesses, even in our industry as crypto companies, we continue to have the same problem getting a bank account, and all kinds of red flags can go up and we can be unbanked just like anyone on any continent in the world for the businesses that we undertake. Now, when you see the ability, though, of, let's say, one of these collateralized tools to bootstrap a business, for example, right? We've seen coins and networks bootstrapped using Uniswap, right? You can deposit some of a coin and then use that to help start the whole network. Do you see those types of products really gaining traction, Nadav? Do you have a focus on small and medium-sized businesses that might be able to use some collateralized products going forward like that? And I mean, there once was an idea that we could use ICOs, for example, to fund coffee shops, right? We saw a bit of crowdfunding of that stuff in Japan and a couple niche markets. It never really took off around the world. Do you see the ability for small and medium-sized businesses to access financing from a smart contract wallet like your own, if there are, different ways to collateralize and find the ability to financialize and bootstrap and get started?
Yeah, so I used to have a different opinion on this than I do now, actually. So I can give you both of those because I think it's an interesting shift that happened in the past year. My answer a year ago would have been not anytime soon, insofar as everything that has worked exceptionally well in DeFi so far has been things that are effectively collateralized by native on-chain assets and not necessarily by something that's off-world and real, so to speak. And the reasons for that are it makes a lot of sense. It's just really, really hard to get a court of law to respect what a smart contract says, or to get a municipality to respect what a smart contract says. And if you're dealing with these meat space small and medium businesses, or even digital small and medium businesses, right, where their cash flows are largely in bank accounts and not necessarily in cryptocurrency, you end up having to have some sort of link between the world of smart contracts and the world of legal contracts. And as soon as you start to pull that thread, very, very quickly, the whole thing unravels in terms of its benefits. And you're sort of like you're defaulting, the escalator turns into stairs essentially, and you're just back at the old financial system. But I think the very interesting thing that changed over this past year was the boom in NFTs, and the fact that and I think an interesting microcosm for this is that you're seeing kind of the first licks of what you just described happening with where small and medium businesses that are fairly obscure right now are like selling NFTs essentially in order to fund themselves, right? They're you know, you go on a website like Mirror, which is a like a sort of, you know, at face value, it's a blogging slash crowdfunding platform, right? That's kind of Web3 native. You have all of these like super interesting like projects or DAOs that, you know, in any other world we would just frame as being a small business essentially, that are essentially like selling like NFTs in order to actually like crowd fund and bootstrap what they're doing. And they've been doing it to quite some success so far. And what's beautiful about that is that like NFTs are actually a on-chain asset that is like, you know, they don't purport to give you, at least most of the time, legal rights to something in meat space, but it just so happens that people tend to find it valuable anyways. And they can be used, at least in the future, as collateral for loans. They can be used as, you know, ways to sort of accrue reputation, et cetera. So I guess the long and short of it is like, I think that on some time scale, the answer is yes, absolutely. I think that what's going to happen, at least on the 1 to 2 years from now sort of time scale, I think it will it will be niche, and it will be very, you know, these very internet native businesses that are effectively like selling things like NFTs in order to like bootstrap their creation. I don't think it's going to be mom and pop coffee shops anytime soon. But I would follow what's happening in the world of DAOs and crowdfunding there, because it's very, very interesting. And I think that it's kind of a sketch of what like SMB financing is going to look like in the future.
And Nola, if you don't mind me picking up on that one as well, because we see a huge demand on that sector as well. But as Nadav said, it's changing, and I think it's maybe happening in a way that people quite didn't expect. But for an example, we serve a lot of small and medium businesses. It's basically the majority of our market right now. And we see a lot of companies raising capital in the form of USDC, angel investment, seed rounds. A lot of that is happening now in the form of stable coins, and particularly in the form of USDC. So we serve a lot of companies who come to Circle, as I said, you know, pretty much to have a pseudo bank account in this new form before they actually have a traditional bank account. So they come already with their seed round in the form of USDC. They open a Circle account. They can already, you know, allocate that capital, you know, get a bit of return on it, but obviously make and take payments and start their business from there. And a lot of these companies who have some sort of a bias for crypto, whether, as Nadav said, maybe they're building an NFT business, maybe they're you know, building some sort of commerce or something else that has to do with crypto. They already have, you know, pretty much a solution ready to go to start as a business without having to go through the more traditional route. That's definitely something. And then touching on the DAO as well, we also see a lot of DAOs coming to us, and we're trying to figure out how to open accounts for DAOs as well, because that's another demand that we see. So super interesting to see how quickly that's happening. I think under the radar of even, you know, what's being covered in the media. I think the way that people and entrepreneurs are thinking about how to kickstart a business is changing quite quickly.
John, and I want to even extend it further to your own personal experience. You mentioned at the beginning of the webinar that you're from Brazil, you moved to Europe, and you've moved to America. I lived in Asia a little bit. I moved from Canada to the United States, and it was like starting over. You know, I had no credit record, no history of financial transactions, even though it was 10 miles down the road for me. I was, you know, I might as well have been from Antarctica. Now you've gone through that, I would assume, now 2 times. That whole transaction history piece, I'm assuming that stable coins and the record of transactions being global, being based on the internet, not in the meat space, could be an appealing aspect for international careers, particularly the gig economy. Is that a product space that Circle is interested in? And I'll go to Nadav next, because it seems to me that there's more and more people in more and more countries all around the world especially with the work from home mandates really kicking off what I think is one of the best parts of COVID and a cornerstone of the golden age. No more commuting, right? Work from home, no more commuting. One of the great benefits that we've had. Do you guys see a lot of products to serve this new market on the horizon, and where do you see that affecting overall inclusion?
Yeah, I'll start, and I'm sure Nadav will have an opinion here because it's super important, right, for the types of services that companies like Dharma are building. We're very interested, and I think 2022 will be a very relevant year for the space of on-chain identity. I think now the way that particularly DeFi, but a lot of other use cases are maturing, and now the history that folks have accumulated in crypto, as you said, and I could talk about my situation and how ridiculous it feels to be over 40 and having to apply for a credit card and feel like you're 18 again, just because you're moving to a different country and not be able to leverage all the history that you have had in other jurisdictions. Crypto can solve that, but to solve that, you need to solve the identity piece first and foremost, right? And I think there has been a lot of advancements in the use of crypto technology for representing identity attestations on chain, right? So not the old style of, every time I subscribe to an account for a financial service, I have to give people my entire information again, and that just creates all these honeypots for hacks and a very poor customer experience. But the idea that I can use certain institutions that can vouch for my identity. I can then represent that in some sort of a claim that is, a crypto token of sorts that then I can bring to all of these services. And people can, again, not trust some institution. To some extent, they will need to trust, but primarily they are trusting the technology, right? They can validate that token and really understand that my identity has been verified by somebody that they can therefore trust. We think that's key to unlocking other use cases around the use of stablecoins, things in payments, and things around the use of credit score and history of transactions. We are investing in that identity and on-chain representation of identities heavily. That there are certainly good things that we're going to help bring to market in 2022. But I'll pass it over to Nadav because I'm sure on the retail use case, it's also important.
Yeah, it's very interesting. I should flag that, first of all, like Dharma is currently like US based, and like the things that we're good at are US based things. And so, to some degree, like everything that has to do with like internationalization of services and like taking advantage of this kind of borderless technology in order to give consumers a better experience interacting with financial services, like that isn't necessarily our wheelhouse yet. So take everything I say with a grain of salt. All that being said, I do think that sort of to Joao's previous point that he made around USDC being this like great vehicle for business payments, essentially, for what essentially like investing in things and whatnot. Like, I do think we're going to start seeing people who work remotely or work internationally or are contractors in various capacities. I think we're going to see more and more of them start to want to accept payment in USDC or Ether or in a cryptocurrency. And I think the reason for that is just that, like, once you're in a bilateral relationship with somebody where both people know how to use crypto and you're like two businesses, you're never going to go back to like sending each other like dollars in a wire. You never. Like if a crypto native venture fund is investing in my company and they want to wire me money and not send me USDC, that would be the biggest red flag in the world. Like, I'd be like, why are you doing this? Like, why? Like this says really bad things about you if you're doing this. Like, and it's a bad experience for all of us. And I think that just like it like you can look at it and like there's empirical metrics to sort of at least correlate with what I'm saying, which is like if you look at like the transfer volume of something like USDC, like all of those things have been up and to the right over the past couple of years. But like just like on principle, like it's the user experience is getting better here, and the adoption base of people who have either stable coins or cryptocurrencies has just been growing exponentially. Like it's just inevitable to happen that like people who are in these very remote work, like international contexts where the people who are paying them are in different countries, it's somewhat of an inevitable shift, right? And you know, it's almost like an obvious answer to your question, right? Like it's like we've all been talking about payments, like cross-border payments in crypto, like since like 2013. Like this was like the first use case everybody thought of. But it's actually reaching a place now where the sort of like last mile distribution is like has gotten pretty good in most countries, and the like UX has gotten better, and scalability is getting to the point where it's actually like pretty cheap, if you know what you're doing. And so like I think that like we can't forget like the core initial use case that we all used to think about a lot, which is payments. and I think that that's going to start happening more and more.
Well, I'm glad you brought up that it was one of the first, use cases, ideas, seemed like a natural fit. But something happened from when it first started to where we are now. And I'll say it's the Chinese social credit model and broadly Chinese fintech globally, right? If you take this new Silk Road initiative where theoretically every station along the way will have the CBDC issued from the central bank in China, and it will theoretically be a useful tool to pay people along the way and do all kinds of stuff. But the major difference between the Chinese fintech approach and what's going on in the Wild West of crypto is the authentication piece, right? The actual tool that you use to engage with a network. And so that piece right away says there's a huge difference between the two. How do you see, I know it's an American focus that you guys have, but do you see these credit scores or let's say permissions being put in place to access networks as a obstacle, problem, something on the horizon, something that would prevent you from fulfilling the goal of financial inclusion?
I can start. I think what we are likely to see is a hybrid model for the next number of years. I think the traditional financial services industry is asking for that. I think regulators are interested in seeing the industry kind of explore some of those avenues. I definitely don't mean that in a way that there will be a shift and all of a sudden people will have to have a clear KYC process to access the entirety of crypto services. I don't think we're going to get there as it is the case in some countries, right? And some countries are pushing hard for that to eliminate the permissionless and anonymous use of cryptocurrency. I think that there are valid reasons and valid use cases for us to as an industry to protect that. And I think, quite honestly, even if we didn't think that we had to protect that, I believe in the technology to such an extent that I think it's unstoppable. And I think the genie is out of the bottle, quite frankly. There's no way to prevent that from happening. But I do think that there are certain cases where, for us to continue to reach more mainstream adoption and improve the user experience, that things like, and hopefully the solutions will actually be better, as I said, on-chain identity, and by all means, I want to be clear, that doesn't mean putting people's identity information on chain. It means having a representation that somebody has vouched for your identity, and you can bring that claim to several parties in the decentralized ecosystem. I think evolving to that model, evolving that additional layer, that would allow wallets and self-custody wallets to also behave as this passport, right? That I think it's a promise of Web3 as well, that not only I can use my wallet for a financial service, but actually I can use my wallet as the way that I authenticate in all these services, but do that in a way that's better and incrementally better compared to what we had before. So I don't need to, as I log into a new service, to give all my personal information to that new service. I think that needs to evolve. I think we need to move into having better solutions in those spaces so that crypto as a substrate continues to grow. And I think we will see that.
And Nadav, I just saw I didn't verify it, but I noticed in Israel, the McDonald's had a limit on if you had a COVID vaccine, you couldn't buy the hamburger, you know? And that looks a lot like the social credit system. Is this something that you're going to feel pressure on? Is it something that you feel like is going to have to get integrated into smart contracts in a certain sense, or is it just a non-starter?
Hamburgers or vaccines? If I'm understanding you correctly, it's like, do you feel like there's going to be like a pressure to essentially include these sort of like authentication, like proof?
Yeah, counter-inclusion forces. Counter-inclusion forces. Yeah.
Okay, yeah, that's a good way of putting it. Mm-hmm. Yes, 100%. I mean, I think the pressures will exist. There's no way around it. But I think it really, first of all, baseline here is that like, no matter the amount of pressure that exists, like the completely permissionless version of these systems it's not going to be stopped. It's like Joao said, it's like the genie's out of the bottle. Like it is like, and I would conjecture that like it will continue to be the most popular incarnation of these various systems. I don't think it's going to be like what the dark web is to the main web. It's like it's like the opposite. That will always be the main lane. Will be like the permissionless version of things, and there will be a permissioned version of things. Now, does that mean that I think that like permissioned systems of various sorts that have kind of like clever incarnations of things like KYC baked into them, kind of in the model of what Joao just said a second ago, will those have success? I think so. Yeah, at the very least. Not even from a like regulatory perspective, but like from like a market demand perspective. Like I think institutional investors are just like, it's not going to be an acceptable outcome for them to invest in something entirely permissionless that could like risk having a terrorist counterparty on the other side or something like that. Like and I think that when you get that sort of liquidity coming in, it's going to engender another side of the market that's going to want to interact with that liquidity, and those systems are going to have a lot of success. Like I think that there is going to be a popular lane that's going to like sort of skeuomorphically fit to the existing regulatory regimes in terms of like things like identity. I just don't think it's going to be as successful as the main lane, and I think that's we are in an inevitable sort of like political tension moment in which the existing systems that well-meaning governments have for regulating financial markets have this assumption that financial rails are regulated at the kind of like infrastructural layer and not at layers above that. And that is just something that is fundamentally orthogonal to how crypto works. And some countries are going to react violently to that. Some countries are going to co-opt that into things like the Chinese kind of CBDC style systems. And then some countries are going to like figure out smart and innovative ways to regulate kind of within that pattern. And I think that those are the countries that are going to see the best results.
So golden age can be built off of the permissionless system because it should be the main lane for all of us.
Yes.
Great. All right, team. Running out of time here. I want to thank you all for coming today. I want to thank our audience for participating. A copy of this webinar should be up on the site shortly. And to our guests, thanks again for coming.
Thanks for having us.
Thanks, everybody.
All right, signing off for CoinDesk now.